order blocks or types of order blocks, minus including the same things we were talking about yesterday. So today we will proceed with describing and defining what are order blocks. So you also come to understand that there are specific candlesticks on the market that belongs to banks, and there are candlesticks that belongs to retail traders. So you'll be able to know where to enter with caution and also without doubt. This is going to help you and to supercharge the way you trade and the way you see the market. You ready?
Yes.
Okay, that's fantastic. Did you take any trade yesterday, by the way?
Yesterday I did on gold.
Okay.
But I haven't actually uploaded my live accounts yet. I'm still like just testing stuff out.
Was it on a new account? Was it on your live account?
I was just putting trades in my demo, not live yet.
How did the trades go?
And they went well.
Oh, that's fantastic. Okay, let's. So today we are going to talk about order blocks. What are order blocks? Can you see my presentation?
Yes, I can.
All right. So
I was thinking of actually, sorry. I just wanted to join on my iPad instead of my phone because it's pretty small. Yes.
Okay. So you want to change?
Join quickly. Yes, I'm just gonna join quickly on my.
Okay. So we are going to talk about order blocks today, and these are the candles that belong to banks. Let's try by first define what order blocks really are. What are order blocks? Order blocks are candles where market makers or banks have placed their positions. Generally, the market returns to those candles and they are never violated. That's the definition. So, meaning they are candles where if the market returns back to them, it may break them, and there are candles where if the market returns back to those areas onto those candles, they will not be violated. They will hold. Let me give you an example. If this is a structure, and a structure is made up of swing lows and swing highs, and these red lines, let's just say they are candlesticks. So what will happen is that if the market gets broken, what will break out above this market structure is what we call a bullish order block. And a bullish order block is the last bearish candle. That's the definition. Is the last bearish candle before a bullish movement that breaks outside or above the market structure. So what will happen is that if the market makes a retracement like this, what will prevent the market not to continue pushing down is going to be a candle, specifically an order block. And that is where mostly the market bounces, and that is where we do our entries. I'm going to show you why I entered on gold, why I bought gold, and also why I bought GBP, JPY. So let's proceed. Order blocks are candles where market makers or banks have placed their positions. Generally, the market returns to those candles and they are never violated, which simply means that when you see where market makers or banks have bought or sold, their candles are going to look different. And you'll be able to tell how healthy the momentum of the candle and the period spent after breaking either above or below the structure, you'll be able to tell that there was a lot of selling or buying pressure at this particular time. So there are two types of order blocks. The first one is a bullish order block. And the second one is the bearish order block. And in this case, I want to first of all take time and explain about bullish order block. What is a bullish order block? Let's proceed. The bullish order block is the last bearish candle before the bullish movement that break the market structure higher. That's the definition. So the bullish order block, it is the last bearish or the last red candle before the market pushes up in the bullish direction. and it breaks the market structure higher. Let's go on the chart and try to identify this stuff. Well, we will try to identify the bullish order block. So what I'm going to do, I'll go and choose British pound, Japanese yen, first of all, and then I'll take you on gold. So this is British pound, Japanese yen, and I am on a 1 hour time frame. Now, if we look carefully right now, I'll just go on a 30-minute time frame so that you can have a very good example of what I'm talking about. And why I bought here, I bought British pound, because look, the market is pushing up instead of it to push down. So first of all, we will take a recognition of us trying to take and to put into place the structure of the market. So that red stuff, that red box, I've even put white. Let me change everything. I'll put white. So that white box is the structure of the market, which we have marked. We want to mark it. And what we'll do is that I have marked it with this white box. So that is the structure where the market was creating the consolidation for quite a long period of time on a 30-minute time frame. So when you look at this structure alone, you're also going to be able to tell that when the market pushed above, the first thing that it did, it broke this white box, which was for this ranging small structure. Because even on top there is also another small structure right there. But for this one, you can tell that the market broke above it and it went reaching and creating a new swing high. Remember what we were talking about yesterday. So it created a new swing high, which was higher than the first swing high here. So you will see that these swing highs, they come in handy and they help us to determine the direction of the market. So when you look at this, the market dropped, consolidated, then later broke above both this swing high by creating a new swing high, and also it broke above this level of supply, which was acting and preventing the market not to go up, and it ended up by creating the consolidation here on a 30-minute time frame. But eventually these guys managed to push up. You're following?
Yes.
Okay. Now, remember about the definition of the bullish order block. It states that the bullish order block is the last bearish. The bullish order block is the last bearish candle. The last bearish candle, or the last red candle before the bullish movement that does what? That break the market structure higher. So it created a new swing high, and then it came and created a new swing low right there by also taking out this previous swing high. Then later the market managed to push up. So now, if the bullish order block is the last bearish candle before the bullish movement that break above the market structure, what do you think is the is an order block right there?
Would it be the bearish order block?
This one.
Yeah, that one there. Yes.
Exactly. That's an order block. So if you want, you can mark it like that. You mark it above it, and also below its wick, like that. I have marked it. I've just marked that order block. And at the same time, remember the definition states that it represents a high possibility of holding the price if the market returns to it. So now, if you look at this, the market made a bullish movement, swing high, swing low, all right? And then it pushed up again. It pushed up, swing high, swing low again. So it was making a return to come and make a retest. So it retested here, then later again has begun pushing up. So if you look closely, you discover that the exact level where the market came and rejected was on top of this bearish order block. And at the same time, it was also both the bullish order block this bullish order block plus the previous level that was acting as a level of supply here built a demand and the market rejected and pushed up. You following? Is it making sense?
Yes, yes, it is.
So that's the reason why, if I show you, that's the reason why I entered here. That's the reason why I entered on GBP JPY right there. Even though the market is making a retracement, I'm going to expect it to have some difficulty because of this structure. So even if it does something like this, I know it is because it just formed a new candle, which is this one. And then as soon as it is done, the market is going to get a rejection on this candle, which will enhance the market to begin pushing up. So that is the reason why I am still holding this trade. This is not my account. This is a prop firm account. I am trading just a funded account, which is a 100K account. So I keep doing this and I keep trading like this based on what I'm teaching you. So I had to buy here because of the bearish order block here, where the market came and it bounced from, and then it came, retested, and then the market had to go back up again because of the same thing that was happening. So that is GBP JPY. If I take you on gold also I bought because of the structure and the bullish order block. So where the structure is, it has to work hand in hand with the order block. So if I extend, this is gold. Look how gold is rising. I bought below and I also bought somewhere here, and the market is pushing up. How did I know that it was going to be so? So first of all, I'll take you on a 4-hour time frame. 4-hour time frame is going to give you a history to what is happening. So another thing that I want you to understand is that Forex is all about history. History will determine the future movement of the market. So if you look carefully, you will discover that the market came and created this consolidation. All right, that consolidation. And within this consolidation, the market created left that bullish order block. I have marked it. Remember the definition of a bullish order block. The bullish order block is the last bearish candle or the last red candle before the bullish movement that break the market structure. So this structure with this white line in a box shape, when it was broken, it was a completely what we call break of market structure. Again, the market here left this bullish order block. So we'll also mark this bullish order block as well. I'll mark it with the box like that. This is the last bearish candle before the bullish movement that break the market structure. So if you look at this, the market went and created a new high, which was higher than this one, a swing high, right? So that swing high was broken and the market went up and created a swing high right there, a new swing high right there. Then after it did that, whilst many people kept holding gold, the market created a retracement. So when the market made this retracement, it had no any other option or where else to go other than to make a range or reject within the premise or the area of this bullish order block, which is the last bearish candle. Why? The first thing that you need to understand is that not everything, every last bearish candle is a bullish order block. There are 2-3 qualifications that make up an order block to be an order block. The first one is that the order block must break out of the ranging or the consolidation of the market structure. So this one broke out of this, broke above this swing high by creating a new swing high there. So it qualified. All right, so we will mark that one. It qualified to be a bullish order block, this one. The second one is the momentum of the candle. Now, look how this candle is looking. It is looking healthy and it is showing some bullish, powerful movement, pushing the market up. So the momentum, it has also qualified, which if we switch to a 1-hour time frame, you will see. And then lastly, which is the thirdly, is the time spent or the period, which talks about the time. So we are on a 4-hour time frame. If you look this candle, this is a 4-hour candle, and this one too is a 4-hour candle. So in reality, the market spent 8 hours going up there after breaking and taking out that swing high. Is it making sense?
Yes. Yeah.
So this one has qualified to be an order block, a bullish order block. If you see that a bullish order block raises and the market goes up but fails to break out either a swing high or the box, then don't use it as an order block. The market won't hold. It will go through without even fail. So here, when you look at this box was taken out using this bullish order block and the market went up. It also took out this swing high. So when this swing high was taken, the market came and reached here. And now they formed another bullish order block. Let me do this. They formed another bullish order block, which is this one. And they needed to take out that swing high. The market went and created a new swing high or a supply. After it did that, the market created now a retracement. Now, guess what these guys did? These guys did, they came back and made this swing low here its level of demand. And the market bounced right there. After it did, that is where now I saw, oh my God, this is an opportunity. Let alone miss this trade, I will enter, and I had to buy because I was looking at the levels. If you remember what we were talking about, the market uses the previous swing high or the previous supply to make and establish its level of what? Its level of demand. So when the market broke up above, it went, and now it came back to retest and it reached here. Almost this level of supply became a demand because the market bounced on it, then rejected, again pushed it down, rejected, then fast forward enough, the market rejected and then started pushing up. That is what made me to buy gold. Is it sounding easy?
Yes, yes.
Easy because I'm explaining, but you get it. It's easy. It's easy to understand. You see, and besides, you have a very good experience with this, so it will be a walkover. So if I did everything, we go on a 1-hour time frame like this. You'll see. So on a 1-hour time frame, we are just going to mark this structure. This was a structure I have marked both. So after I have marked, we have also put into recognition that this was the previous level of supply, which later was broken, the market pushed up. So here, you're going to get a glimpse of the reason why the market is moving up. Number one, when it broke this previous supply, the market went up. Again, after that, it created a retracement, and it turned out to be the previous level of supply became a demand here, and then the market went up. The market tried to come back again here. It found there was a level of a demand. The market could not hold and stay for far too long. It has already made what we call a swap zone, from being a supply to swapping into being a demand here. And then the market started rising. That is the reason why today in the morning, when it was London session, we had no any other option but to buy, because the market must push up. It is coming from a principled and a very powerful, strong level, and the market must go up. If we go on a 30-minute time frame, now after I analyzed, I started on a 4-hour time frame. You should always remember that. On a 4-hour time frame, that's where I started. So on a 30-minute time frame, we can tell that this was a structure. It was broken. The market came, made the previous supply to become its demand. And at the same time, another confirmation is that if you look at this, this is a bullish order block, this small candle right there. Why? Because it broke out of this structure and it came and created a new high there. Then later it came to create a demand or a swing low, then later rejected, pushed up to create a new swing high. And then it came and created another swing low here. Again, the market went and created a swing high, which issued now to the retracement to come now and establish a demand after they discover that, oh, this is our level with this bullish order block. and the previous level of supply, which becomes a demand here, the market rejected instantly and then started pushing up again, just like that. Again, from there, if you look, the market came tested a second time, failed, the market pushed up. If we go on a 15-minute time from now, where I do place my entry points, you have another good enough reasons. So here, when you look at this, many support and resistance traders will lose money on this move here. They will say, oh, that's support, that's the resistance. Guys, prepare to sell. Me, I'm expecting the market to continue pushing. There is a difference between support and resistance and demand and supply. Demand is a level where buyers are found. Supply is a level where sellers are found. Resistance and support, these are levels where the market goes and bounces many times until it manages to break. It bounces on those levels many times. So that is a reason why it is very much dangerous for you to be trading support and resistance right now. Better you trade supply and demand, because you understand that here there is a level of demand right there. Why have I said that? If you go back in the history, you look at this level. That's a bullish order block right there, where gold left that order block and then pushed the price up there. So that is the reason why the market could not continue pushing. It ended right there and established a demand. Whereas the support and resistance traders, they expected the market to come back and hit, because the price has been bouncing on this white line. But as for me, I never expected the market to come back here. That is the reason why I had to enter right then and expected the market to push up. Is it making sense?
So you didn't expect the market to come back to the white line because of the demand?
Yeah,
at the bottom?
Because if you look at this, this was a break of structure. The market tested it, failed, and then the market rose. That was yesterday. After it rose, the market created this structure and then came back. It couldn't continue going down there because of this level of the bullish order block, which sponsored this move here. This move alone is able to tell you that banks, they had to use a lot of money in order to push the market up, because it takes about $100,000 to push the market by 1 pip. So if these guys are trying to push the market by 10 pips, they will need $1 million. Now imagine this is gold. How much money did these guys use from moving the market there by pushing it up there to that level of supply? That was a lot of money. So that is the reason why the market here qualified this to become an establishment of demand zone here, and the market could not go down any further. And that is the reason at the same time, the market started making a rise from this same level. And if you remember, if the market is making a rise on an uptrend, it will be creating lower high, higher high. All right.
Higher highs.
Lower high, higher high, lower high, higher high. So this is where now trend lines makes sense. Okay? If you want, you can even do this. This one never even broke below. It rejected instantly right there. And if you also apply the past to determine where the market reached right there, you can also just use the previous level of the demand here and you extend it. You discover that also this one became a demand with an inclusion and another confirmation of this bullish, of this trending trend. So in short, it takes you to have some good pair of eyes in order to see what's on the market. The secret is you never to force the market to do what you want. Is you to obey and let the market does what? Lead you. That's the secret. All right. So if I send you, I will send you the screenshot for my my gold trades right now as we speak. On Telegram, I've sent you. Okay, so when you look at this, this is the reason why I had to enter. All right, and this is the reason why I also made sure that I decided I needed to have something big, a bigger account, and that was to be trading for prop firm. Why? When you open a bigger lot size, just a small move, it is going to give you $5,000. It is going to give you $2,000. So you can even be able to determine your daily profit target with that way. So this trading type will be giving you at least, you will, if you can rate your trades, you are going to have the minimum is going to be 7 out of 10, 8 out of 10, 9, even 10 out of 10, because you'll be trading with patience, you'll be waiting, whereas other people are anxious, they are entering, you'll be relaxing and you'll be waiting. So you've gotten the point about bullish order blocks, right?
Yes, I have.
Do you have any questions?
No, so just to confirm, like the bullish order block would be the last bearish candle before it pushes up. Before the bullish candle pushes up, I guess higher than the previous swing high.
Exactly.
Breaks out of the consolidation and then higher than, and then creates a higher high than the previous swing high. And then it could retrace back towards that order block.
The market will be able to reject, bounce.
It could retrace, back to that point, but then it will push back up.
Yeah, exactly.
Okay.
Like that. So it is very, very much important that you understand how this whole thing works, because you discover that even as you are making your analysis, it is going to be very much simple when you are analyzing. Also, the simplest way also to define about a bullish order block is, as long as it breaks the structure of the market, it can either be a consolidation like this one here. This was a bullish order block. And also it can break both it can either break just this out of this ranging market structure. It is a bullish order block. And it can be able to take out the previous swing high. So this bullish order block took out this swing high by creating a new swing high where this bullish candle reached right there. So this one qualifies to be a bullish order block, right? So sometimes we'll just be seeing it just breaks out of this consolidation, but it doesn't broken that swing high. Still, it qualifies to be a bullish order block. You get my point?
Yes.
That's fantastic. So from there now, I want us to look and try to define and identify bearish order blocks. So what I'm going to do, I'll go on the presentation where we will explain what a bearish order block is. Of course, it is the same. It is the same. It is the same. It is the same. So the only thing that differs is the definition. So what is the bearish order block? The bearish order block is the last bullish candle before the bearish movement that break the market structure lower. This represents a high possibility of holding the price when the price returns. They are never violated. Real order blocks, they always stand their ground and the market respects them. Let's go on the chart and try to identify what bearish order block look like. So, and a very serious and good example that I can give you is this structure, as well as this structure. All right, this structure. And at the same time, we are also going to put into recognition this swing low here, which was also, you can even call it a peak formation low, because it was the lowest point of all places where the candles were ending. So this one was the lowest point. So these guys could come, reach here, fail. The only way they managed to reach here was when the market dropped. So again, they tried to reach, they failed. And now finally, they needed to break below the structure. So what did they do? They used the bearish order block. So you can say, if I ask you right here now, where is the bearish order block? Which one is it? This one or this one?
The bearish order block.
This one or is it this one? Which one is it?
The second one?
This one.
Yeah.
Great. That's good. This one was created, but it couldn't break. It ended here where even this candle ended and almost reached this swing low. But however, it managed to break out. It was just a fake breakout, and then immediately the market rejected. But this is on a 15-minute time frame, and I'll take you after we finish the definition of the order blocks. I'll take you so that we can back test together for a few minutes. I know you have somewhere to go, work to go. So
no,
when
that's work doesn't start now. We're starting earlier today, so I still have time.
Okay, that's wonderful. So when you look at this candle, this is the bearish order block, because a bearish order block is the opposite definition of a bullish order block. So a bearish order block is the last bullish candle before the bearish movement that breaks the market structure lower. So this one qualifies to be the bearish order block. Number one, it broke both these boxes and it took out this swing low, and it came and nested, all right? It came and nested a new low here, all right? It came and nested a new low here, lower than this one. So when that happened, this one qualified to be a bearish order block. And if you look carefully, we are talking about how many points? 1,995. That's a lot of money when it comes to gold. We are talking about the salary, you combine the salary of 2 people or 3 people in once. If you just enter with a good lot size, even just a lot size of 2 standard lot size, where you make $20 per pip, with gold, you make much more than that because the pip value is different. So after this happens, we even call it the break of market structure. So now, the interesting part is that let's not forget to mark the previous level of the demand, which too was broken. So I will extend this from a better reference in the future. I will extend that. So after I've done that, when you look carefully, you'll discover that this was a demand. The market structures, the swing low, the market broke down below. So the same principle applies. After the break of market structure, the market must always go back to retest. So here, the demand became the supply. And another reason more to give you a reason why the market ended there, it is because of this bearish order block. I'll even fill it like this. That's a bearish order block. And then what I'll do is that I'll extend this. So as you can see, because of the money which these guys used, this was an institutional candle, the market dropped. Because of the money that these guys used, it made the market to have so much impact, this level, to become a level of demand. I mean supply, from being a demand. And the market has been failing to break it, drops. Reaches there, rejected, drops. And now finally we are here back up again. Where is the market gonna go? I'm expecting the market to break this level either today during London or New York session. We will see what will happen. Except that the market nowadays is not stable, but I'm expecting the market to break above today. So why has been the market consolidating here? Without further ado, it is because of that bearish order block and also the swap zone. The demand became a supply right there. And at the same time, the structures were broken. That is on gold. But if you go on a higher time frame, like 4-hour time frame, you are going to tell that the market is in a bullish movement. It is pushing up because it is coming from this bullish order block, that one, which is the last bearish candle. That is where the market is coming, and it is trying to compensate the loss by pushing up the market. So this also will give you hope, because you have to see the market both on all time frames. If you try to go on a daily time frame, you're going to see the market in a different view. On the higher time frame, daily time frame, This candle is telling us that the market is still pushing. It needs to go and align itself with those two candles. That is also my view. So, and at the same time, you're going to have the power and the confidence to trade this type because it broke this structure. And the reason why the market came came here on a daily time frame with this just one candle, it was coming to make a retest right there, which you can only see on a 4-hour time frame. That the market on a 4-hour time frame, that the market is issuing a retest, is coming from testing this level here, which we saw on a daily time frame, a very powerful level, and we should expect gold to continue pushing. Any question?
Can you please go back to the daily time frame?
Okay. That's a daily time frame.
Okay, so here, did you see a bearish order block?
Where?
Oh, sorry, a bullish order block?
Yeah. This one.
Okay, that one? Okay.
Higher time frame, it's this one. And let me even do this. This one, which if we go on a 4-hour time, it will look something like this. This entire thing, which is also happens to be the broken market structure using this bullish order block. This one. Okay. But on a 4-hour time frame, we have another bullish order block with this structure. With this structure. So each time frame will be giving you different order blocks, different structures, and all those things. Okay. That's the very most important thing that we need to understand. But nonetheless, the market will always be moving like this. And if you're trading like this, it will remove fear. You know, there are certain times when a person is trading, he was just fine. As soon as he is planning and preparing to execute and enter on the trade, blood begins rushing in his body as if it's just from running. The heartbeat, the pulse changes. You know, he's doubting, have I entered the right thing? You even start worrying. But there are ways in which when you're trading at peace, knowing very well what is happening. When everybody else is afraid, is doubting, or maybe the market is going to reject, you are relaxed because you know what the market is doing and where the market is coming from. That's the beauty thing about knowledge when it comes to Forex. So that's the thing. Yeah. Let me take you on GBP USD as well. So GBP USD, I want us to begin analyzing. So even here, that's the reason why the market began dropping. All right. I looked at this entire big structure. When I looked at it, I was like, oh God, the market here is planning to do this. And after I looked at it, I also remember marking the level of this bearish order block, the last bullish candle. I marked it up and below like that. After I did that, I also remember marking the level of demand. It may play an important role here to become a supply, but the market went above it. From there, if I teach you, I teach you about the price. I knew, and I was even telling a guy whom I was teaching that the market, we should expect a fight at the price of 34,000 flat. 34,000 flat price. Those were my preparations. And the market, even though it went a little bit about to 34,100 there, the market rejected. So even if you had entered there, you would be maybe just 13 pips up there, but eventually the market rejected. Why? I even told the guy that the market was going to drop. And if it drops, we should be ready to take profit somewhere here because that's a bullish order block. And also that is a structure, which now I even told him to say that will give you something like, you know, if the market reaches here, that is 35 pips, of which it reached here and made almost 34 pips right there, which is a lot of money. For a guy who trades specific pips, in order to make something on the market with profit target, daily pips amount. It is very much important. So those are the other reasons that I considered. The market structure was broken, break of structure, creating now a retracement. When the market reached here, it found this bearish order block. This bearish order block was accompanied with two things: the structure, the bearish order block, as well as the 34,000 price level. This one, very much important. Though the market went up there with 2 hour, 1 hour candles for now, these two candles, 1, 2 for 2 hours, it was just for about 13 pips. So if you had entered there, it would have just been in loss of about 13 pips, but eventually the market would have gotten back to normal. So these are the ways in which you should be thinking to trade and to see the market, because it is going to be helpful. You'll be trading the market in the professional way. You'll be thinking in the professional way. Whereas break of market structure, or retail traders are waiting for the market to reach that level of resistance. You have seen an opportunity to enter. These guys, they have missed the trade. Market never reached there. So it is all about market psychology. These guys, they play people with their minds and their emotions. Now, other than that, let me now give you another last back test. We'll go on a weekly time frame. GBP USD. It was the same thing that we went together on yesterday. So if you look carefully, what happened here is that the market structure was broken. And if I ask you, we need to